Hi everyone, welcome to Stocks Investing Science. In this video, we will do a full in-depth analysis of the company, that is OLA Electric and the two-wheeler electric vehicle industry as a whole, and to see what is offered for the OLA Electric in the upcoming IPO. And also we will in this episode we will also discuss on the history of the company, some of the important news and the controversies that had happened in the past, and get to know about the CEO and co-founder of the company, and also we'll discuss on the business operations of the company. Then we will discuss on the industrial trends and growth trajectory for the EV as an industry, and also highlight on the potential risks, and I will also put forward all the financial numbers so that you will make a the decisions based on the numbers, and we'll also be doing the peer comparison and also get to know about the important subsidiaries of the OLA Electric, and finally we will look at the valuations and some of the positives and some of the negatives for the company, and conclude this video with the IPO details, and also will give my perspective for the company as well. Before going on to the main business, let's discuss a brief introduction and history of the company. OLA Electric Mobility is initially incorporated as a OLA Electric Mobility Private Limited in 2017 in Bengaluru, Karnataka, and then they started the OLA Future Factory in Tamil Nadu in 2022, and started the delivery of the OLA S1 Pro through their subsidiary, that is the OLA Electric Technologies. And for the OLA Electric Mobility, Bhavish Agarwal is the CEO and co-founder of the company, and he will be the main management and he will be the main decision maker for the company as well. So now we will look at a brief introduction and background on the Bhavish Agarwal. So Bhavish Agarwal has born on August 28, 1985, completed his degree in computer science and engineering from IIT Bombay. Before starting the OLA Electric, he has started many other startups such as Ola Cabs. You might have already know about the Ola Cabs. So Ola Cabs is one of the largest cab riding hailing companies, and then he started the Ola Dash, which is similar to Zepto, which is a quick commerce company, IM, to deliver groceries and other essential within 10 minutes. As the business doesn't work out, the business got shut down in 2022, and then soon after that Bhavish Agarwal acquired Food Panda by giving them a 200 million valuations, and this is one of the company which was targeted to compete with Zomato and Swiggy's of India. And as the business didn't do well like he did for the Ola Dash, he after 18 months of the acquiring the business, he again suspended the full food delivery business for Food Panda. So these are the past businesses that Bhavish Agarwal has owned and suspended, and there is one more business that he has recently started, that is the new AI company, that is the artificial intelligence company, that is called Krutrim, which aims to develop comprehensive AI computing stacking for India, which includes data centers, servers, supercomputers, and one of its key projects is the creation of the large language models tailored for Indian languages, enabling advanced generative AI applications specifically for India. So that is the new company that he has recently launched for the AI and mainly for the Indian languages, and to grow the Indian AI applications. So that's the brief on the Bhavish Agarwal. So as you can see, he has a practice of starting the business and shutting down if it doesn't work out. This is not good, and this is not especially not good for any publicly listed company. He has to go through all the struggles to make it profitable. So this is one of the risks for the business. Now let's look at the business verticals that Ola Electric Mobility is working on. So So yeah, Ola Electric Mobility is primarily engaged in the electric vehicle industry in India. The company focuses on development, manufacturing and distribution of electric vehicles and essential EV components. So their business is segregated into 4 subdivisions. Uh, so we'll go one by one. So first one is the manufacturing electric vehicles and the components. So Ola Electric specializes in producing electric vehicles, particularly two-wheelers like scooters. The company has launched several models including Ola S1 Pro, Ola S1, Ola S1 Air and Ola X1 X Plus, and then the other X series. So these scooters feature advanced technologies like smart connectivity, multiple driving modes and enhanced battery life. This company's electric scooters are designed to cater to a broad audience, offering options ranging from premium to more affordable models. So and also Ola Electric has announced a range of electric motorcycles like Diamond Head, Adventure, Roadster and Cruiser. These motorcycles are set to launch in the future with a focus on different riding experiences, from off-road capabilities to stylish urban commuting. These products are designed and advanced features and are built to cater to the growing demand for electric mobility. So we will next look at the vertically integrated technology and manufacturing. So Ola Electric going forward would like to operate its business in a vertically integrated manufacturing model, which is called the backward integration of the manufacturing process. Um, this means the company controls the multiple stages of manufacturing process, from the development of the key components to the final assembly of the vehicles. By this, the Ola Electric can have a better control on the cost, supply chain, logistics, and quality of their battery packs. So, Ola Electric also wants to manufacture core EV components such as battery packs, electric motors, and vehicle frames. By producing these components in house, the company ensures quality control and optimize performance for its vehicle. In order to get this done, they are strategically planning to build two things. One is Ola Future Factory and the other one is Ola Giga Factory. In the Ola Future Factory, this is a state-of-the-art facility in Tamil Nadu, and it is capable of producing a significant volume of EVs annually, and it is designed to be highly flexible, allowing for quick adoption to different product specification and performance requirements. And in the upcoming gigafactory, they will focus on the production of the advanced lithium ion cells and batteries, which are critical component of the electric vehicles. By the manufacturing of these cells in-house, Ola Electric can better control costs, supply chain, logistics and quality of their battery packs. Now let's move on to the third subdivision, that is the R&D and innovation. Ola Electric places a significant emphasis on R&D across various regions, including India, UK and the US. Their R&D efforts mainly focuses on key technologies such as software and electronics, motors and drivetrains, and cell and battery packs. So these are the main things that and they are focusing on the R&D and the innovation part. In software and electronics, they are trying to develop proprietary software systems and electronics that can enhance vehicle performance, safety and user experience. It includes their in-house developed Move OS, that is which powers various smart features in their vehicles. So in motors and drivetrains, they are trying to find innovations in terms of the electric motor and drivetrain technology to improve the efficiency, power delivery and vehicle range. And in terms of the cell and battery packs, they are trying to develop the advanced battery technology, which includes the development of the custom battery packs and battery management systems. The upcoming Ola Gigafactory will play a very crucial role in this area. So Ola Electric's in-house commitment to R&D will definitely enable the company to create many adaptable platform for multiple vehicle models and maintain control over product performance and reduce time to market them as well. So thereby they can easily cater to a variety of customer needs and different market segments. Now at last we will come to the distribution and sales. Ola Electric work on direct to consumer customer, that is D2C distribution models, which contain three things. One is the experience centers, that is and service centers and the online platforms. In the experience centers, these are the physical locations which will provide customers the opportunity to explore Ola Electric's products, to take test rides and to receive in-person supports. As on 31st of March to 2024, the company operates almost around 870 experience centers across India. And with the service centers, the company provides extensive after sales support through its network of service centers. These centers are often integrated with experience centers, which ensures customers have convenient access to maintain and repair services. These two are the offline distribution channels. They also have the online platform through its website, allowing customers to book test rides, purchase vehicles, access various other services digitally. Along with this, there is an app called the Ola Electric Companion app. Further enhances the customer experience by providing features like remote vehicle monitoring and control. So this omni-channel distribution, that is 870 experience centers, 431 service centers and an online website, allows them to ensure that the customers can interact with the brand in both online as well as offline, which enhances the convenience as well as the acceptability. Now let's look at the revenue contribution of the products. Looking at the revenue contribution of different scooters accounts to the percentage of their revenue. The main products of electric mobility are the electric scooters. Their current lineup includes Ola S1 Pro, then Ola S1, Ola Air, Ola S1 Air and Ola X Plus. So the Ola S1 Pro model, that is previous generation as well as the current newer generation, is the premium electric scooters with a range of up to 195 kilometers, and it goes to a top speed of 120 kilometer per hour, and it has advanced smart technologies on a 7-inch touch screen. So this is the one, and then the second premium scooter is the Ola S1 Air. This operates with a range of almost 151 kilometers, featuring a 6 kilowatt peak motor. And it has smart technology on a 7-inch touchscreen. And then this is the newly launched series. This includes the Ola S1 X Plus as well as the Ola S1 X, which operates with three powertrains, that is one with a 2 kilowatt battery, then the other one is 3 kilowatt battery, and the third one is a 4 kilowatt hour battery. These are positioned as a more affordable options, with offering almost 151 to 190 kilometer range based on the power pack. So looking at their revenue contribution, so in the year 2022 only one scooter was launched, and it was accounting to almost 85% of their profits. And then in 2023 they launched the Ola S1, and it was accounting to 30% of profits. As in the 2024 they launched two more, that is Ola S1 Air and Ola X1 Plus, along with the newer generation Ola S1 Pro. So if you can see the main premium models, that is the generation 1 S1 Pro, and then generation 2nd S1 Pro, and the Ola S1 Air accounts to almost 70 to 75% of the revenue. If you can see the Ola S1, in previous year it was accounting to 30% of the revenue, which is now reduced to almost to 2.68%. That was again due to the newly launched models. So the newly launched models accounting to almost 11%. That is the mostly the affordable options. So in terms of the revenue contribution, all the products are contributing to in a good extent. So this is the business operations for Ola Electric. Now let's look at the industry for the electric vehicles as a whole. So this is some of the industrial overview for the company. The newly technology which is driving the next wave of the growth for the automotive market. So the advancement in the cell technology is driven mainly due to the advancement of cell technologies. So EVs are either comparable or to even better than the internal combustion engines in terms of the speed, range and energy efficiency. So EVs have almost 55% lower the total cost of ownership when compared to the ICE counterparts, that is the internal combustion engines. So it is almost like 55% lower. So that's a very good advantage for any electric vehicle over the life of the vehicle. This has driven mainly due to the lower fuel costs, that is the that is the electricity, and always it is almost roughly accounts to 1/10 of the ICE motor vehicles. Now coming to the market share of the scooters, that is the electric scooters, it is expected to grow by almost 11% CAGR. The high growth potential of this segment along with a small base is projected to drive strong growth in volumes at almost 11% CAGR over the next 5 years. This will ensure the domestic two-wheeler market to reach almost 2.8 to 3.6 trillions by 2028. So this is mainly driven by the growing middle class population. Increasing urbanization will lead the demand, and also favorable policies frameworks are also the major growth factors for the growth in the electric two-wheeler market. Now coming to the electric two-wheeler penetration, in 2018 it was only almost looking at the number, it is only 0.1%. So coming to 2023 it is accounting to almost 4.5% of the electric total two-wheeler markets. As per the estimates, electric two-wheelers are expected to see faster adoption than the other technologies like smartphone and laptops. So two-wheeler penetration is projected to be to grow to 41 to 56% of the domestic volumes, and will be growing by almost 11% CAGR, and it is by expectation to 2028. So it is expected to grow to almost 41 to 56%. Now coming to the EV electric vehicle two-wheeler penetration across India, if you see, only certain states have seen a stronger electric two-wheeler adoption, such as Goa, which is around 18.1%, Kerala it is at 13%, in India that is Karnataka is at 11%, and Maharashtra is at 10%. So there is a significant growth headroom in terms of the electric two-wheeler penetration when compared to the global markets. So we can expect some other states also will come to this level by 2028. So there is a good headroom for the growth in terms of the electric vehicle two-wheeler penetration. So this is the main industrial trends for the electric two-wheeler market. So definitely there is a huge room for the improvement and the growth trajectory for the electric two-wheeler market. Now let's look at the financial information for the Ola Electric. So now to look at their total income. So coming to the total income, so the numbers are in millions that I will be converting it to crores. So in 2022 they have the total income, that is the revenue, for almost 456, which is grown to almost 2782 crores, which is almost more than doubled or tripled in terms of the revenue. And then from 2023 March 2024 it has again grown, it has doubled in terms of the revenue to 5243 crores. So in terms of the total income, they are definitely doing well. They are selling more number of the scooters. So now let's look at the loss before tax. So like I said, the company is not making profits, they are still in the loss. So in 2022 they made a loss of 784 crores, and in 2023 even after making such an amount of revenue, the net profits, sorry, the net losses had significantly increased to almost 1472 crores. And then from 2022 to 23 to 24 again they increased the losses to almost 1584 crores. So in terms of the revenue they are definitely making huge progress, but as they are making the progress, they are still continue and increase in terms of the losses. So that's not good for the company. So now let's look at some of other numbers for the Ola Electric. So in terms of the peer comparison, that is in terms of the market share as well as the revenue. So Ola Electric Mobility has a good amount of market share. From 2022 they have increased market share to almost 21%, and currently they hold to almost 35% of market share in the electric two-wheeler market. So next to that is the TVS Motors. So they are still long way, almost half they are trying to manage. So in terms of the electric two-wheeler markets, definitely Ola is at the holding a good market share of almost 35%. So and then let's look at the revenue. So as these are also manufacturing the ICE motor vehicles, so there's nothing that we can compare with the only the pure electric vehicle player, but just for you to look at it. So definitely there is a significant difference in terms of the revenue that these companies are making. So again I will not say any differences over there, but yeah, definitely in terms of numbers there is a huge difference in terms of as they manufacture both ICE vehicles as well as the electric vehicles. So now coming to the subsidiaries, like I said, these are not only these are not the only they have many more other subsidiaries, but I wanted to cover only these two due to the fact that these are the important subsidiaries, and we should have information in terms of these company losses that they are incorporating to the main holding company. That is, one is the Ola Electric Technologies and the other one is the Ola Cell Technology Limited. So if you just need to add these two numbers, you will get the full total, the net losses for the holding company, that is the Ola Electric Mobility. So main losses are incorporated only by these two companies, because the Ola Electric Technology is the one that makes the scooters, electric two-wheelers, and the Ola Cell Technology is the one that is mainly focusing on the in the cell manufacturing in the by incorporating the new gigafactory. So both of the subsidiaries are making a huge amount of losses. So just wanted to inform that this company has these two subsidiaries and they are making a huge amount of losses. So this we should have also have to keep in mind. Now let's discuss the key risks that are involved in the company. So like I said in the previous slide, so the OLA Electric technology and the OLA cell technology have incurred losses and negative cash flow from the operations since inception. So from the inception till date they have not made any profits. They are in the losses, and they are still making sure that there is no evidence that they are going to be profitable in the future. They are still in the phase to get profitable. And coming to the second one, they could experience disruption in terms of the supply or an increase in the prices of components and raw materials used in the manufacturing of electric vehicles. As mainly the lithium supply is controlled by the China, so this supply disruption can happen at any time of the any time, so that we need to be careful on. Now the coming to the third one, company experienced high employee attrition rates in the past and may experience similar attrition rates in the future, which may impact our operations in FY24 they have experienced attrition rate almost 44.28, and in 2023 they have experienced attrition rate of almost 47.48%. So almost in 100 people like 47 people are going out of the company in a year is not a good definitely not a good sign for the company, as any of the important personnel who makes a great impact in terms of the R&D or any business operations leaving the company will have a great impact in terms of the company's future. And coming to the fourth one, any reduction or elimination of government incentives, that is the PLI scheme, the FAME subsidies, would increase the retail price of the electric vehicle and could adversely affect the customer demand of our electric vehicles, which will again impact the achieve to achieve the profitability as well. So that's the another the key risk that the company have. And in this chart you can see that in the month of June 2023 government have reduced the FAME subsidy, which has impacted the registration, as this is one of the risks. It can happen any time, happen in the future, which will impact the company sales, operating margin as well as the net profits. So if you can see from the May to June, almost there is a dip of almost 10,000 registration. To achieve this they took almost another next 6 months to achieve the same amount of registrations. So this can happen anytime in the future. If the government wants to reduce the subsidy, this will definitely impact the OLA Electric. And now coming to the IPO details for the OLA Electric Mobility. Before going on to these numbers, Bhavish Agarwal is also selling his stake in the company, and he will earn almost 288 crores from the IPO. So that's another thing that we need to be careful on. So the IPO open date is on August 2nd, which is already open, and closed and will be closed on August 6th. And the price band is set to almost 72 to 76 per share, and lot size is 195. So in terms of the total issue size, it is aggregating to almost 6,145 crores. In that, fresh issue is almost 5,500 crores, and the offer for sale is almost 645 crores. So now let's look at the objects of the offer. So coming to the first one, that is capital expenditure to be incurred by its subsidiary that is the OLA Cell Technologies for the expansion of the capacity for its cell manufacturing plant from 5 gigawatt hour to 6.4 gigawatt hour, and it is classified as a phase 2 under the expansion plan. This accounts to almost 227 crores of the IPO proceeds that will be going on to this reason. And then coming to the second one, that is the repayment or the prepayment in full or part of the debt incurred by its subsidiary, that is 800 crores. So coming to, like I said, these are the two subsidiaries that they are incurring a lot of losses. So one is this OLA Electric Technology, and the other one is OLA Cell Technology. For these two, it is accounting to almost 2000 crores of proceeds is going to this two alone. Now looking at the third one, that is the investment into R&D development, and this accounts to almost 1600 crores. So this is a very risky thing, because if you invest in R&D, you might get something great out of it, or you might not get anything out of it. So we should be very careful in this proceeds, as they are offering almost 1600 crores for the R&D. And then coming to the fourth one, expenditure to be incurred for organic growth initiatives, that is almost coming to the 350 crores. So, and then the last one is the general corporate purposes. So these are the four that they are going to use that 5500 crores of the fresh issue in. So you should be very vigilant to see the growth in terms of the expansion as well as the debt they are repaying, and also the R&D plans that they have. And coming to the IPO dates, IPO is opened on August 8th and will be closed on August 7th. Allotment will be done on 7th, and then the refund will be you will get by 8 if you don't get the IPO, and the listing will be on August 9th. And I want to add one more thing here. Company is keep on taking the debt in all the years. So if you look at the debt from 2021, they are keep on taking the debt to manage their losses. So again, currently they are having almost 2389 crores of debt. That's a huge amount of debt they are holding. They have to pay the interests also on this. That's a huge amount of debt they are taking, and they have taken by the IPO proceeds they will be repaying the debt, almost 800 crores of debt only, and the rest will be here and there they are using. So now so coming to the valuation part, so in terms of valuations, companies asking almost 33,500 crores of valuation, which is very high for a company like this. I will tell you why it is high and all that. So I know, like, company has a good headroom and all that, but this is definitely a high valuation for a company which is making net losses. So in terms of the price to earning, as the EPS in the negative, so currently it is trading the PE before pre-IPO is coming to almost 17, and then post IPO it will go to minus 21. So so that's based on the current gray market premium that the company is having. So currently the gray market premium is trading at almost minus 8 to 10 rupees of the listing. So if you apply for this IPO, and if you get the IPO, the IPO will be listed to almost, as the band is at 72 to 76, it will be listed to almost 66 to 68 rupees. So this can definitely change as the date goes on, but this again, and this is not something which is realistic. I am only telling as per the current valuations and current gray market premium. So don't trust on that number. So minus 21 is again like too bad for a company. Like I can't say anything much on that. So companies who like have asking for 3,500 crores of valuation, which is making a net losses of 1,500 crores of losses. So this is crazy to just tell you. And now let's look at these. Let's give you a conclusion on the companies. So what I see, I will tell you the positives for first, and then I will go to the negatives. So company has a good headroom and growth trajectory, as company has a very huge market share to obtain, and definitely that will help the company going forward. And then as company has a good market share, the company is already having a good user data collection, which can definitely help them in the future, so that they can definitely make a better product based on the data that they have. And the company is holding to almost 35% of market share. So again, that is another positive sign. And then the execution part. So in terms of the execution, as the company started in 2017, they started their manufacturing in 2022. So they have definitely captured the market share and they've executed the plans early as possible, so that they can gain good amount of pace in terms of the market share. And definitely I can say that they have done a good execution part as well. So now coming to the negatives. So the first one is the dependence on China. So Ola imports imported supplies from China made up to almost 36% of its cost of material consumed. And this reliance is a key threat, as China controls almost 80% of the world's lithium supply. And while last year 70% crash in the lithium prices is due to the Chinese oversupply benefited the company. The supply concentration makes lithium prices prone to high volatility. This is another thing that it depends mostly on the China for the lithium ion battery. And even it plans for cell manufacturing gigafactory, it is again hugely dependent on the China for the supply of the lithium. So anyway, they are dependent on China. First thing, that is one negative. And the second one is the valuation which they are asking. They are asking 3,500 crores of valuation, which is not a good thing, to be honest. And then the third one is the competition that they have from the current players. And the fourth one is the government subsidy. If government subsidy goes reduces, or like they remove the subsidy, definitely company has to increase their cost of the scooters. So the another one is that. Then the fifth one is the attrition rate that they have. It is account to almost 45% attrition rate. That's not a definitely it's not a stable thing for any company. And then the company is making a huge net losses. The another one is that. So that is not a good sign for any company that is coming IPO'd in the recent days, as we have already seen for the Paytm, how the market has punished. So you should be very careful on companies like this. And then the last one is the unproven business, as there is a lot of uncertainty around the electric bikes, or any electric scooters, or the electric cars. So the industry requires extensive R&D, and electric vehicle battery packs means aggressive expenses. So the company is new as alternatives to lithium batteries, and they're still in the work. So the charging infrastructure remains severely underdeveloped in an already energy deprived country like India. Hence, scaling up this business may prove to be a to a task definitely, and definitely will burn a lot of cash from the company side itself. So that's the overall analysis of the Ola Electric. uh, so so yeah, that's it. Hope you got the in-depth understanding of Ola Electric and the electric automotive as an industry. If you have got the valuable information, please do consider subscribing the channel, and also do hit the bell icon so that you will be notified when I upload a new content. And please do comment your thoughts on the Ola Electric, and also let me know whether you are applying or not for the Ola Electric IPO. So if I have to say, in my perspective, I will not be applying for the IPO, because of the valuations. Definitely they are asking 33,500 crores. Maybe when the company is listed, and when the company started trading in market. So if the company comes to almost 15,000 to 20,000 of market share, so I will think of buying at that range. And that's mainly due to these factors. One is on the good headroom the company has, and the market share that it is having, and user data collection that it has. So it can definitely serve the customers in a better way. So that's it for this video. Thank you so much for watching, and will and we'll see you again in my next video.